Morning everyone, and welcome to another RF Crypto video. Today's markets, we see it drop by 1%. It's down to $1.14 trillion as the global market cap decreases, but just by a tiny bit. We see this more of as a correction rather than an actual drop or a bearish sentiment in the market, because at the moment we don't really see any bearish sentiment in the market. Bitcoin is down by 1.2%, Ethereum by 1.5%, Cardano 1.9%. Rest of the market follows suit, some in the 2s and 3%, but it's not a massive drop for a market which is risky, such as the crypto market. And if we look at the 7-day moving, most of the coins are up. Bitcoin is up by 2.8, Ethereum is up by 10.2, Cardano 8, XRP 3, Solana 7. So this decrease isn't something to panic about. It is a normal correction. We see that yesterday prices increased slightly, so there are some individuals in the market that are taking profits, most likely. Looking at the price of Bitcoin, we see it still trading quite laterally. There has been a 1% decrease compared to yesterday, but it's not much. It's still trading within the $23,000 support level and $24,500 resistance level. And I think that we can adjust this resistance level to 25,000. And this is just due to the fact that in the past few days, the peaks have been more on the $25,000 level rather than the $24,500. And this shows that the markets are currently evolving towards a more bullish sentiment due to the fact that the resistance levels are being pushed upwards. Other than that, there is nothing much to talk about. We are seeing the price of Bitcoin hovering in the middle of these bands, or the support and resistance levels. So at the moment, it's almost 24,000, which is between 23 and 25,000. We have seen a decrease, but as I said before, this is just a temporary correction, and at the moment there is a lot of bullish sentiment in the market, so I'm kind of expecting the prices, instead of going down, to go up. So Crypto.com earns regulatory approval to operate in the UK finally. They announced today that they got regulatory approval from the UK's Financial Conduct Authority, or the FCA, to act as a crypto business. With this approval in hand, the firm also meets local anti-money laundering regulations, which is very important for any financial institution. All financial institutions that are operating in the UK have to comply with such laws. And because they got the regulatory approval from the FCA, it also means that the FCA is satisfied with their internal anti-money laundering measures, and it stands with the UK regulations. But despite making inroads in the UK, the crypto firm has also had to execute hefty layoffs amid the latest downturn, or the bear market that we're facing. In June alone, the firm announced cuts of 5%, or 260 people were laid off. Yesterday, however, a Crypto.com employee in a managerial role spoke under condition of anonymity to explain that another round of cuts was also expected. We haven't seen an uptick in activity in the crypto market that we would like to see, or that the company is expected to see, so Crypto.com doesn't need so many people to operate, and therefore they are going to cut their staff and probably rehire them when they need them when another bull market comes by. So talking a little bit about UKs Turn To Crypto, they have been very bullish on crypto lately, and Crypto.com's approval is another way that the government is pushing forward with its agenda to make Britain a global hub for crypto asset technology and investment. Also, the former finance minister in the UK, Rishi Sunak, stated interest in researching stablecoins, crypto and blockchain technology in an attempt to bring a forward-looking approach to the country. So the regulatory approval of Crypto.com is a big step in terms of making UK a big crypto hub globally, just for the matter of fact that Crypto.com is one of the biggest crypto firms in the world, and if the UK can get them to come into the country and comply with regulations, then it's a massively good sign. It means that they are getting ready to become more and more intertwined with the global crypto markets. At the same time, they're building a regulatory framework which should be out any day in order to attract more and more crypto companies. Obviously, it has to be with regulations so that these companies can know what to do and can comply with the law. So hopefully this gives some traction to UK's attempts to becoming a global crypto hub, and it's the step in the right direction. On other news, crypto crime falls 15% along with bear market. So illicit activity down by 15%, but at the same time, there has been a 36% decline in legitimate transactions. So legitimate transactions have gone down more than twice as much as illicit activity. And this is because there's a lot more incentive to steal people's funds than to do legitimate transactions in a bear market. So if we dig into specific forms of cryptocurrency-based crime, we find that some have actually increased in 2022, while others have declined more than the market overall. Total scam revenue for 2022 is 65% lower than it was through the end of July 2021, and it sits at 1.6 billion. And this may be due to the fact that we're in a bear market, and there's a lot less funds to steal, there are a lot less protocols to hack, there isn't a lot of free money flowing around, people just investing anyhow and not protecting their funds just because they're on a bull high. Also, a lot of people have become more educated in terms of crypto scams, and it's a fact that the change suggests that fewer people are falling for cryptocurrency scams because these scams are less enticing now that values are dropping in the bear market. So the bear market has also served as a learning opportunity for people onto what scams are, because they're less willing to accept that something is a scam in a bull market. But in a bear market, they're more likely to see that a scam is a scam due to the fact that funds are limited and everything is so tight. Also, there has not yet been a significant scam in 2022 compared to past years, when scammers behind Plus Token made off with over $2 billion in 2019, or when Finico stole $1.5 billion in 2021. So it shows that these protocols are investing heavily in cybersecurity and putting a lot more safety mechanisms in place, which makes it a lot harder for hackers to put their hands on massive amounts of funds, which is a good sign. But we will never have a situation where scams and theft fall to zero, because as long as crypto assets held in DeFi protocol pools and other services have value and are vulnerable, bad actors will try to steal them. So we have a situation where we have a lot of valuable tokens, we have a lot of valuable NFTs, and people will try and steal them because no matter how many security patches are put in, there will always be security vulnerabilities. And now it's just a cat and mouse game between the protocols and the founders onto sort of the vulnerabilities are found and exploited, and then on the other side is these vulnerabilities are patched up, and it's a cycle of continuity in terms of who can win, the hackers or the protocols. So Colombia is to introduce central bank digital currency, says the tax agency chief. So the South American nation's new government would look to create a digital currency that would make transactions easier for the consumer. It is the first time Colombia's government has talked about introducing one, because the new president, named Gustavo Petro, last year said while campaigning that the country should mine Bitcoin using renewable energy instead of producing cocaine, which is quite funny. But it also shows that Petro, this new president, is very bullish on Bitcoin and by extent crypto. But there have been a lot of security concerns around it. CBDCs are centralized, unlike cryptocurrencies, which are decentralized. This means a central power, that government controls them. And privacy advocates have warned that they may allow states to snoop on citizens' spending, as well as more easily exercise capital controls, especially in a sort of unstable and corrupt country like Colombia. But all in all, adopting a CBDC has more benefits than risks, and Colombia is becoming increasingly crypto-friendly. Last month, they released draft rules for crypto companies that want to operate in the country, which is incredible, and this may translate into laws later on. And this might make Colombia a very attractive destination for crypto companies. Also, its major banks have partnered with crypto exchanges, including Binance, in an experimental project which allows customers to buy small amounts of digital assets like Bitcoin and Ethereum through their largely traditional channels. The banks have already partnered with crypto companies to trade cryptocurrencies. Even though they're small amounts, this test will serve as a basis for crypto adoption and the implementation of crypto, or the homogenization of crypto, into the Colombian economy. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.